Alright, so today is June 15th, 2021, Tuesday. Today we actually had a very small loss, and that was it for the day. There's quite a few things we can learn from today, so I'm going to go over that quickly after we take a quick look at my loss. So, my loss, if you see here, we were consolidating. We did have a bit of a push during London, we had a gradual push during Asian, but for the most part, there wasn't a whole lot of volume. Especially once London gave this small push down, we held here for hours and hours. We even held here through NY Open. Um, and at 8:30, we had our PPI and retail sales news coming out. So as far as that goes, if we look over here, um, the core retail sales, we are expecting 0.4%. Retail sales, we're expecting a negative 0.6%. Now, when I was analyzing these forecasts, it's trying to figure out, try to see what I thought about these forecasts and how it could affect gold. I was wondering, how the hell are they expecting negative retail sales when the US has been reopening? And why the hell is core retail sales more than double more than expected? So when I started to think about this more, I came to a few conclusions that made a lot of sense, and it's definitely something worth noting. So if you look here on core retail sales on Forex Factory, it tells us that it's a change in the total value of sales at the retail level, excluding automobiles. So that means excluding cars. So if it's excluding cars, just like how in other things like core CPI, for example, when there's factors in these economic events that are very volatile, sometimes they'll have a core version to subtract these volatile factors to try and um, give a more accurate representation on the on the group of I don't know what the word is, but CPI, for example, CPI includes things like food, water, and stuff like that. Food, water, energy. The only thing is, energy specifically is very volatile. So, what they do is they have a core CPI which takes out energy so that we're able to more accurately see what the CPI numbers are like instead of just having, say, one of the five factors completely throwing it out of whack. So, that's what's going on here. Um, if we go down to actual retail sales, see here, change in the total value of sales at the retail level. Um, and yeah, and then this is without automobiles. So now if we think about it, why would core retail sales without automobiles be expected to be good? But when you throw in automobiles, it's gone to shit. It's expecting very bad. So when you think about this more, you think about how the US is coming off of COVID, obviously. And if you think about it, lots of people are starting to work from home. That's becoming the new norm. So if people are starting to work from home, they're not going to need cars anymore. They're not going to be as antsy and excited to buy cars anymore. So that, of course, would lead to significantly less purchases of vehicles or automobiles. So automobiles completely made this entire percentage plummeted, even though if we look at core retail sales, which doesn't include cars, everything else in retail sales was actually going up, which is what we expected because the US is opening, so everyone's out shopping. So that explains it right there. The other thing to consider when it comes to cars is I don't know the details, but I know that there's been a chip shortage that's essential into building, from what I've heard, like essentially every car. So with this chip shortage, that adds on to the lack of sales because with chip shortage, that means the production has slowed down. That means the production is lower, and if the production is lower, then of course the sales are lower. So that will put automobiles down, which will sway retail sales way down negative. Take cars out of the equation, and we're looking good. Now, the stats that actually came out ended up being poor in both cases. Of course, retail sales with the cars were worse. As we discussed, they probably would be. Now, the reasoning behind why core retail sales may have fell quite a bit short is the stimulus check boost has kind of faded off. When everyone was getting stimulus checks, the economy was getting pumped and pumped with all of this money people were spending after they got their stimulus checks. And that's swayed things way in the positive. And now, typically during these economic events, when things like that happen, when it needs to level back out after pushing up very high, then it will push back down. And these inflated numbers that we may have had in past months, such as 8.4%, super high number, 5.9%. We had some here, but small numbers, so that tells us that it was staying pretty much the same as the month before. So these two numbers right here were highly inflated because of these stimulus checks that were going out. So once everyone had spent their stimulus checks, once checks stopped going out, the retail sales started falling very short and started rebounding from that initial boost in inflation of sales. So that's pretty much it for explaining retail sales. That was something really to take note of, very interesting. As far as PPI goes, PPI was good numbers. So all in all, what we can take from this news is that although they both ended up being negative, I was expecting it to be mixed news, which actually ended up happening because instead of this being positive, PPI ended up being positive, so it did end up being mixed news. Now, where I made the mistake is, despite me knowing that we were likely gonna have mixed news, which means mixed news, maybe there won't be very much of a move during the news announcement. I still decided to place a sell stop below this zone, specifically below this last wick. What I should have done is listen to my gut instinct. I should have known, alright, 8:30 news is coming out, but it's mixed expected. So if it's expected to be mixed, and it does end up being mixed, then we're not going to have a very powerful move, because part of the news will be pulling down and part of it will be pulling up. So it's going to stay in this range likely. We did end up getting pushed down. My sell stop got activated. I went about, I can't remember, it was a few pips in profit, and then immediate rejection. Hit my full stop loss. Now the good thing is, when I trade news, I significantly lower my lot size, so it was a very small loss. But nonetheless, I definitely shouldn't have taken that trade based on my news or my fundamental analysis that I just discussed. And furthermore, I could have at least waited for a 5-minute close below if I did want to take sells off of this news. So after I made that mistake, I watched the charts for a bit more. NYSE passed. Absolutely nothing happened. And typically I've been finding with gold a lot of times, when we have this long period of no volume, and even with a news event, we still didn't get that volume push. When you mix in this lack of volume and, news events hanging over us, so we had this news, but we also have a very important FOMC meeting tomorrow. I have found gold sometimes will just range. It'll continue to fake out, drop down, fake out, drop down, fake down, drop down until the news happens. So once NYSE passed, I was kind of expecting it to be one of those days, so I called it a day with my small loss. Now what ended up happening is it did end up breaking, and to be honest, it would have been a very easy trade. So I'll just go over that very briefly. Again, we were having small candle closes here, lots of wicks. Very strong push down. We even got a 15-minute close below all of this. It had a small rejection at that last wick here. So easy entry would have been here at 10:15. We had a pull up. But once this low breaks, that means we're breaking this last wick. and we're going to be able to get a good push down. Go on the higher time frames. You see this is where it was right here at this wick. So we were looking to at least come down to where these closed, if not fill these wicks down here. And that is exactly what happened. Yeah, we had this push once this low break, easy entry, textbook. Would have been easy to catch, but fortunately I wasn't looking at charts. And later on in the session, to be honest, I wouldn't have caught this because I don't like trading past 11 a.m. But had this happened earlier, this of course is another textbook setup. We had the break, we had the retrace, we had resistance formed, a bearish close. This broke this low, plummeted to at least retest this, ended up continuing downwards. Anyways, that's it for today.